don't know if you're live already. So let me check. Alright guys, so welcome to my YouTube channel. If you're new to this channel, please remember to subscribe. And yeah, so guys, just like the title states, in today's video, in today's live stream, I'm going to show you how you can literally make forex, trading forex,
Welcome to this comparison video between Midjourney AI and Blue Willow AI.
Sorry guys. Okay, I was still confirming if I'm live. Yeah. Okay, so guys, yeah, this is an indicator. Like I'm literally using 2-3 indicators right now, and they all like play a major role. So the thing with the smart money concept is that it's never that easy for someone to understand it like ASAP. Yeah, especially like if you're a new beginner, like you're new in this market, it's never easy for you to understand. The first things that most people tend to learn about is the support and resistance, yeah, the swings and stuff like that. So basically when I started trading, those are the things that I really wanted to know about when it came to technical skills. And then once you've been in the market, you start you hear people talk about price action, smart money concept, how you can trade using that, how to be profitable, how big institutions use that. But do they really use that? That's a question that most of us cannot really answer right now. But I don't want to take sides with it or stuff like that. But here's the thing, yeah, there are ways that you can actually be profitable in the market, and that's why we have indicators. You'll find most of the traders who have been in the market for so long will always advise newbies not to trade using indicators or not to rely on indicators for this and this, yeah. But as a newbie, you know that indicators are not 100% accurate. So that is one of the things that you need to have in the back of your mind. So before you can actually start trading, it's always advisable that you have your analysis done first before you imply or even implement the indicators. So for instance, right now this is what you can see, but this is Australian dollar, Audi GPY FXM. So when you come to Wanda, you will see like I always have these lines over here. This shows that I've actually analyzed the market. I have some of my key points literally marked, stuff like that. So the point where I start introducing the indicators and stuff like that is where like I want to really see, is the market playing out as I actually anticipated. But even without these indicators, I can easily draw a few things, yeah, like basically the market, the basic formation of the market or the structure of the market is always it's said that the market is ranging or it's on a trend. It might be downward trend or an upward trend, yeah. So from there is where you start spotting like the swings and stuff like that, yeah. So that is not what I really wanted to talk about. I wanted to talk about like the best indicator. So I'm just gonna go back to the other side where I still don't have drawings because I wanted this, yeah. So most of the people out there, most of the traders will always tell you not to rely on the indicators. I don't want to object that, but at the same time, we cannot assume that the world or the technology and everything has not been like, people are creating all this technology to make work easier, and I feel like forex is not that different from any other platform of making money or working basically. So that's why you'll see people working day in day out trying to create indicators to analyze the market for people, and this kind of makes work easier, especially for new beginners who want to like understand the market, or even know what it means to have like change of character, break of market structures, or break of structure, stuff like that, without this, it's never so easy for someone to explain this for you, or even to you. Hey, yo kizungu, man. Okay, so this is an indicator. It's a smart money concept indicator. And one of the things you need to know is that the market, here are the few things that I learned when trying to use the indicators. I've learned this for a long time. So before you can start, like, this is Audi GPY 5 minutes time frame. I actually took a sell around this zone over here once I confirmed that the market was actually selling. So this bar over here, this one will actually give you overview of where you expect the market to go to. There are high chances that the market may drop to this level, and when I zoom out just a little, you notice that we have the blue zone and we also have the black zone. So the black zone over here indicates the bearish OB, and we also have the blue zone indicating the bullish OB. What this means is that you notice that whenever the market gets to this point, if you do your analysis, this is 5 minutes time frame. So if I had like 1 hour time frame, or even 4 hours time frame, you'll notice that most of the time whenever the market gets to this point, there is, or there has been, like a push to the downside, and so this automatically forms like this is one of the bearish zones. Please note that this does not actually mean that being that this is a bearish zone, that it cannot, like, the market cannot go above it or stuff like that. The market can actually move above it. The only thing that the market really needs is a momentum to push this to the upside. We've seen like market breaking this structure, so it doesn't mean that every time the market gets to this point it will actually move to the downside. Just a second. Babe, acha na kukol, niko live stream. Na live stream. Okay, sorry guys about that. So what's happening is that you'll notice that whenever the market gets to this point, most of the time the market will push to the downside. But this does not actually mean that every time the market gets to this point it will always push to the downside. You might see some sort of resistance, but if the market actually succeeds in collecting the orders, or the order blocks at the bottom and some of the liquidity at the bottom, it might just come and push this to the upside without actually having that struggle. So I'm trying to use simple languages. That is what I'm trying to use. I don't want to confuse anyone, because I know most this is something that a newbie can literally use to understand. So let me just show you something. Whenever you see like a market is moving towards a certain direction, you want to pay attention to the orders, to the order blocks. As you can see, when I expand these, I'm just trying to zoom in these candles, you notice that like here we have the red candlestick, then you see like some grayish form of liquid formed around it. So these are some of the order blocks. So you will expect at some point that the market will push to collect these orders. So what happens whenever the market push to collect orders that are on top, like the market was moving this way, let's say. This is something that I learned. I've been keen analyzing this. So let's say the market was was on a downtrend. I don't know if I'm drawing this perfectly, but just bear with me. Okay, so let's say that this, I'm just drawing a crown. What? Okay, so let's just assume. I want you to assume. I'm not a good artist, but try and assume that this is a downward trend. This is a downward trend. And on this downward trend, the market moves down, but sort of you start seeing like some ranging market, and you notice that every time it's dropping, it's leaving some orders at the up here, like it's leaving like some orders up here while it's actually moving down. So what you will expect at some point, whenever you see like the market moving up, it's actually moving up to collect those orders. Once it has actually collected the orders that you'll see over there, it will actually trail to the downside. Most of the time you'll notice that that is what happens in the market. But whenever you see like the market is moving down, like right now we see the market is moving down, for me my target is around this zone over here, where I see like there is some orders around here. But if at all the market does not come here, as I'm just stating like right now, I know that it will have to come and collect this order. That is one thing that I know. So I'll have to wait for a few, like it might come down multiple times just to collect these orders. And once it has collected this order over here, you will see it pushing to the upside. Yeah, it will push to the upside. So the more it collects, like it might collect, like let's say here there were like some orders before, you'll find that it has collected those orders, moving to the downside. Yeah, so once it has collected those orders, it will start pushing to the upside. So this indicator is one of the best indicators that any newbie, if you want to trade like smart money concept, you can use this indicator to trade your smart money concept, because it is simple, it is direct, it is something that it's so easy to understand as compared to because I don't want to assume that every newbie out there, like if I give you like a chart right now, you will just know how to draw the support and resistance, how to draw the change of character, the break of structures. I know that most of the people won't really know or even understand what that actually means. Yeah, that is one of the things that I know. So these indicators, they're not your enemies, or they're not there to make you like so comfortable or anything. If you're a newbie, you can always use these indicators to help you understand. Like for me, when I started trading, I never really understood what this change of character literally meant, what BOS literally meant, and I did watch videos trying to explain that, but I couldn't really understand it. But now when I have this indicator over here, it's so easy for me to understand what's really happening. I can even explain to someone what change of character literally means, or even what break of structure literally means. Yeah, because it's so easy to explain at the moment. Yeah, so guys, so before I can actually even proceed, most of you want to know the name of the indicators that I'm using. And yeah, so for me, I'm using 3 indicators. You might choose to use one. For me, I always love having like 3 indicators on my chart, and these are the indicators. We have the Institutional Trading Lab, we have the Smart Money Concept Expo, and we also have the Smart Money Concept by Lux Algo. So guys, in as much as I have all these indicators, the first thing that I always do, and I showed you when I started this live stream, is I always try and do my analysis without these indicators. That is for sure. I'll always do my analysis first, and then once I'm done with my analysis is when I launch the indicators, and so I can see like if my analysis is somehow correct. That kind of builds your confidence in the market. If you're not sure like if your analysis was right, you can do that. That is one of the ways that you as a beginner trader can literally use to build your confidence in the market. Yeah, that is one of the ways that you can do that. So for me, analyzing, using, you do your first of all, you do your analysis. Once you've done your analysis, is when you launch your indicators. Sorry guys, I was a bit held up. Okay, so that is when you will start now launching your indicators, because now you're sure that the market is moving towards your direction. And what happens once you whenever, this is one of the things that I always say. So the market, you can see like for me right now, my target was around this zone over here, and I can see like the market is actually reversing, yeah, to the upside. So one of the things that I can actually do whenever I see these, I always move with my stop loss for starters, because I don't want to be in a trade where the trade is not like, the trade maybe was going towards you, and then all of a sudden it started going against you. That is one of the worst things that can literally happen. So I always move with my stop loss. So let's say I entered here, my stop loss was around this zone over here. So once the market starts moving to the downside, and I'm in profits, I'll remove my stop loss from up there and put it under my sell position. And so just in case I wasn't active, I wasn't watching this chart, and there is like a reversal, if the market goes up, it will hit my stop loss, but if it hits my stop loss, I will still be in profits. But if it doesn't, I'll still be safe. Yeah. So yeah. So so even right now, how to note if the market is on reversal. So for me, one thing that I always do is I mark these zones where you see like there is some sort of resistance. So you notice at the back, let me just show you. Around this zone over here, if you mark this zone where we're seeing some sort of reversal, this is one of the zones that we've seen like some sort of resistance around this zone. Like at this point when the market was moving down, it bounced, it came to this level, then it bounced back, it came again to this level, bounced back to this zone over here. Also, you'll have to mark this zone, because this is actually the smart money concept. Literally, most of you might not really pay attention to it. This is basically the general info, or the simplest, or even the simplest basic general information on how to mark the ideal places if you want to trade smart money concept. The first rule is to note where you see like the market is getting to that point and you see like some resistance, or even a bounce towards, like if it was selling, like here you can see the market was actually selling, it came to this point, it bounced back, and then this level, it did not just test this level once, but it tested it twice. Yeah, so this becomes like an area of interest. Yeah, you want to mark it. So you notice that whenever the market, so in as much as you're using like these indicators, you notice that the market has come to this point and it's bouncing back. Why is it literally bouncing back? It's because like there are a number of sellers around these zones, yeah, that are trying to push the market to the upside. So the momentum that you're going to see, the movement of the candlesticks to the upside, is what is going to show you if the number of sellers still left around this, the number of buyers still left around this zone are more than the number of sellers. Yeah, because it might bounce. Yes, we've seen these kind of movements, like the market gets to the point of resistance, it bounces back to maybe a specific zone like here, and then it comes down, forms like another channel pattern, and then you see like something of the sort. Or at times what it does, like it just comes down, bounces, comes to this zone, and it just passes through to this. Whoa, this one was poorly drawn. It just comes to this zone, yeah, so it comes this way. And then you'll also notice this, so most people, if I did not enter this trade around this zone over here, I'll be waiting to see like a bounce around this zone, or a breakout, a good or a well confirmed breakout to the downside. Also at times you'll notice this kind of movement, like the market is just coming down, gets to a specific point like here, moves right up. It will confuse you that maybe it's still buying, might come this way, form like another pattern, and then at that point it decides to move this way. So these are some of the patterns that you should actually watch out for, because not every time you see like the market bouncing at the point of resistance, that literally means that the market is now reversing or it's going up. stuff like that. Now what you need to do is you need to pay attention to what is actually happening. If you wanted to enter this market right now, for me, whenever there is like like this on this point over here, you can see this kind of movement here. This one I would have entered with the second or even the third candlestick, pushed it to this point, and I'll be out here. But this one, you notice this is the second candlestick wasn't really strong. The momentum wasn't really that strong as the first one. So yeah, this is actually what I was talking about, guys. You can see this pattern. The market came to this level, went back, came to this point, and you can see it's trying to break out of this zone. So I'm still waiting to see which pattern it's going to form. Is it going to form this one over here? Is it going to form this one over here? Or is it going to form this one? Yeah, before you can actually make any decision. It can also form this. Let me just, the market might come to this point, come back up, come this way, and then yeah. So these are some of the patterns that you need to watch out for, like in resistance level, support and resistance levels. That is if you're trading. Yeah, so one of the things, I don't think if I'm leaving anything, am I leaving anything out? Am I really leaving anything out? I'm not even sure if I'm leaving anything out. So let me just, yeah. So yeah, I was still talking about these indicators. So yeah, the best thing with these indicators is that you can use them in any pair. If you are trading, like if you are trading, let's say gold, if you are trading Audi GPY, if you're trading Euro Audi, stuff like that, you always find the charts playing perfectly for you. So the only thing you need to do is to add a few skills. Yeah, do your analysis and stuff like that. So this is my analysis now. Yeah, I entered this market around this zone over here, and I'm still holding my sell positions. So once the market gets to, if the market is going to break out here successfully, my target will be around this zone over here. And the chances are, guys, remember this is a downward trend. Yeah, it has been ranging, yeah, but now I'm trading on a 5 minutes time frame, and this is what I see on a 5 minutes time frame. Let me just try and draw it because I want my live stream to be as educative as possible. Yeah, this is the general move. Yeah, in as much as we had this change of character over here, because this one was higher than this, remember the market was, we have like two lengths. Let me just show you. This is what we call like a pattern within a pattern. We have this over here. Oh no, this is just a different pattern. This is a different pattern. Yeah, so you can just draw it well, you know. I'm just trying to, so let's assume there is this one. This was the trend. Yeah, this was the first trend. It was a downward trend, came, it broke out of this zone, came and tested this level, went up, then it came down. Yeah, forming another different pattern. So at this point over here, it decided to push to the upside. Yeah, after pushing to the upside, this was lower, this point was lower than this level over here, making this, let me just now move this to this zone, making this still like a some sort of a downward trend. Yeah, but the market came up and broke out of this zone, tested this zone, and decided to move higher. And you notice like this level over here was now higher than the previous one, so creating like a change of character. Yeah, created a change of character at this zone. So that is where you can see like the chalk. So if you're new, the chalk literally means for change of character. Most of the time it represents the point where you see like the market maybe was moving on an upward trend or even on a downward trend, but now there is a reversal, and you notice that for instance this point we had like a reversal, and this point over here was our lower low as compared to this one. This was lower high, sorry, this was lower high, and this point was lower high. It was lower than the previous lower high. And then we noticed that after testing this zone, after breaking out of this line here, it came back, retested this zone, and there was a push to this level, creating a higher high. And you can see this difference over here. The height of the previous lower high is higher than the previous zone. So that's where you get like change of character, because it kind of indicates that the market has actually changed the character, reversed, it has changed the trend, it's racing to the upside. That is what is actually that is what the chalk literally stands for. Yeah, that can imply when there is an upward trend and when there is a downward trend. So in a downward this was an upward trend. Yeah, the market was moving to the upside, you can see, and we have like, you can see, because I have like two indicators over here and both of them are smart money concept, you notice that there is this chalk different zones. Yeah, but you can always just do this. Yeah, okay, so let's say at this point the market was racing to the upside. Yeah, after getting to this point it came down to this level, went up, came down to this zone, and went higher, creating a new higher high. Yeah, after creating higher high, and you notice like this level is higher than this one, and this level is higher than this. So it was still on an upward trend, creating higher highs and lower and higher lows, sorry, higher lows, higher highs. So at this point over here, once the market came and tested this zone over here, the market pushed to the upside and then decided to reverse to the downside. And you notice that the first point where like it stops when dropping, it's a bit lower, this zone over here. You can see these stars over here, this point, you notice that this point is lower than the previous low. Yeah, so now it has started creating a lower low, and then we move and we wait for a swing literally. So this was a drop and there was this swing over here, though it wasn't really strong. So they've marked like one that is more predictable and someone can literally see with the basic eye, which is this zone. But if they could have seen this zone over here, they would have also marked this as BOS or BMS. BOS basically means like break of structure or break of market structure. The BMS, break of market structure, and BOS, break of structure, still the same thing, just different terminologies, but it means the same thing, the both break. Yeah, what it means is that the swings, yeah, this level, it came to this level, went up, came down, breaking this zone, goes up, and then you notice like when this after going up, it came and broke out to this level, and this zone, when you mark it straight to this, you notice that this was a new point of resistance to the movement that was moving to the downside. Yeah, so that is basically the BOS. So when you start paying attention to these indicators and how it works, then you start understanding the kind of movement or what it actually does. So guys, that is how you use this indicator. Always at these key zones, always be patient, don't rush to enter the market, don't rush to do anything. Whenever you see like the market has come to a point of resistance, if you wanted to enter the market, because trust me, when you look at this over here, this level from here to here, it's still a good level. Somebody can like take a few bags from there, yeah, a few cash if you enter the market, just a few candlesticks to the downside, and you'll have made like a few profits. But the point is, when you're entering the market at this point, this is a point of resistance. Yeah, anything can happen at this point. It might push to the upside, it can decide to move to the upside, create a new pattern before it can actually come down to collect this order. So if you want to enter the market, when it is at the resistance point, you need to wait for the key, or maybe like you need to wait for a confirmation, wait for like a breakout to the upside or a breakout to the downside. Look at the candlestick, see the candlesticks that are being formed. Watch out for the reversal candlesticks. The patterns that you're seeing, the push, the momentum that you see on the candlestick will also help you know if the market is actually pushing to the upside or if it is pushing to the downside. And yeah, basically this is all about this candlestick. This is one of the simplest candlesticks that you can have. But if you still don't know how to draw this support and resistance, there is also that candlestick, that indicator that can actually help you with that drawing of the support and resistance. You don't want to find yourself in a situation where you don't really know how to draw these. So there is an indicator for that. You can always check out the indicators, and yeah, it will help you. I'm not suggesting that now if you get indicators you stop analyzing your charts always. I think that is what I started with. I started telling you guys I always start by analyzing my charts without the indicators. Once I'm done analyzing the charts without the indicators is when I launch the indicators. So most of the time when I start analyzing my charts, this is how you will see. This is how you'll find my chart. This is how you'll find my chart. You can see over here, this is marked at this point. You'll find me marking this point. I always like marking if it has like, I like marking the body and the wick. So this is our highest zone. I'll mark that, and at this point this is where like there was also like a test before there was a push to the upside. You'll see me marking that, and then I'll come to this zone over here. You can see I've marked that, and then I'll come and measure this, see if there is like some sort of resistance around this zone over here where we've seen like a lot of swing around this zone. I can also mark these. You can always just mark them. This will help you. Like you'll notice once you've marked your charts, I want you to do this. Like I want you to go to TradingView, open an account with them. Just sign up an account, it's free. You can use the free version. If you feel like you want to upgrade, you can actually do that. So once you've done that, I think I'll leave the link in the description below. So once you've done that, mark these key points. Yeah, once you've marked these key points, I don't want you to trade like with a live account or stuff like that, but if you want to trade, you can maybe opt for like a cents account where you can deposit the least amount and actually trade with small lot size, and try to pay attention to what is actually happening in the market. Whenever the market reaches these points that we actually draw as our support and resistance, you will notice that every time the market gets to that point, there is always some resistance. You notice that there is a push to the upside, there is a push to the downside, stuff like that. So you notice like over here, the market was actually coming down, comes here, pushes to the upside, and then it broke out of this structure, coming down to this level, creating a new low. And when you go back to this zone where the market came to, you notice that before the market used to come to this zone and there was like a push to the upside. Yeah, so that is one of the zones that you need to mark. In this zone over here, guys, you see I had this line over here, but let me just pull it to the back so that you can see what is actually happening. Okay, so guys, yeah, you notice that yes, this is one of the points where we see like some sort of resistance, like we see like a push to the upside, stuff like that. There is some movement whenever the market comes gets to this zone. We see like a push to the upside or a push to the downside. So this is what was happening before this breakout over here. This was our support before. So the more you pull these to the back, the more you'll find that these zones have been tested. Remember, the basic idea of the support and resistance is that let's say we had this zone over here, these zones over here, demand and supply zone, or support and resistance. Yeah, so let's say this was our demand zone, this was our supply zone. You notice that once the market, let's say this was our market, obviously the market won't be always this straight, as you can see. So once the market literally breaks out of this zone, this becomes the new floor. Yeah, I want you to understand, like, the demand, supply and demand. It's like, let's say you're living in a building, yeah, in an apartment, gorofa, that is the simplest way. Yeah, so let's say you're living in an apartment. So in this apartment, you notice that at the bottom there is somebody maybe living, or maybe it's parking, and then there is a floor, that is the demand. Yeah, and then the upper part is the supply. So if you break out of this to the higher, if you climb higher, or even you break that, if you break that ceiling, yeah, the ceiling, if you break the ceiling, it becomes the floor. In an apartment, like the person who is living on top of you, your roof is the floor to that person. So that is the same thing with forex. So you notice that, let me just do this. And it's not a guarantee that the market will always so let me just stop here and then draw this. So this is what I mean. Yeah, so this is your floor, this is your ceiling. Your ceiling is somebody else's floor, and they have their own ceiling. Their own ceiling is someone else's floor, and they also have their own ceiling. And forth, and it goes forth and on and forth. Whoa, it goes on and forth like that. That is just the basic idea of what to expect in the markets. That's why people draw support and resistance. If you've ever asked yourself, like, why do people draw support and resistance? Why do people draw support and resistance? Support and resistance kind of helps you as a trader to know some of the key zones where there is some sort of resistance, or even a bounce in the market. So like what you see over here, the market is bouncing from this point to this point, to this point, to this point, to this point, to this. Let's say you take like a tennis ball and you have like something, rectangular box, or even you are just dropping it from your roof to the floor. It will be bouncing. Let's say it's a hole and it's moving, and you've just hit the ball with a momentum and it's dripping down, and it will drip that way until it gets like an outlet where it will either drop or even jump to the upside before it comes down. So basically that is the basic idea of why people draw like support and resistance. So whenever there is support and resistance, you'll notice that around these zones over here, you'll notice some sort of resistance. Either the buyers will be waiting at the demand zone, the sellers will be waiting at the supply zone. The basic knowledge of supply and demand that people learn in the economics class or even the business class. That is it. So let's say this was our tennis ball. It just bounced. Then at this point, it got like a loop and went higher. Yeah, and it kept on bouncing and bouncing and bouncing and bouncing, and this keeps on moving on and forth until they find like a breakout. You can see this was a breakout to the upside, you can find like a breakout to the downside. Yeah, so in as much as you want to trade, let's say you want to trade the smart money concept, stuff like that, the first thing you need to know is to mark some of the points where you see some sort of resistance in the market. It's going to help you to know how to maneuver the market. It's going to help you to know some of the key zones where there are like some manipulation, sell stops, buy stops, stuff like that. Yeah, because that is what the institutions do. They know. At times you'll notice, like, let's say what just happened over here, for instance. The market came down and it bounced right back, and then it decided to come down, and you can see like this, the kind of resistance around this zone. Yeah, you can see the kind of resistance that you're having around this zone. The market is trying to push up, but the number of buyers are not strong enough around this zone. That's why you can see like the movement, it's a bit sluggish. Yeah, they're coming down, they're moving up. What they're trying to do is to find some of the orders left around this zone to pump the movement to the upside. Yeah, and if they cannot find that orders, if they find the orders, you'll see like a push to the upside. But when they don't, they still have like some orders, the sell orders, the sellers are still strong, so they'll keep on pushing to the downside. So you will notice, I want you to pay attention. Just go and open an account. You don't even have to open MT5 or anything. Just go and start open like an account, sign up an account with TradingView, and I want you to study the charts. Just look at the charts and mark some of the key support and resistance before you apply any indicator or whatsoever. Yeah, before you apply any indicator or whatsoever, I want you to just do that and pay attention to how the market moves whenever it gets to these key resistance zones. I was actually looking at this pair, I don't know, let me see if I can get like XTR USD. So I'm just gonna let me use the one that I've actually drawn some of the this one. Yeah, so this is what I was telling you guys. Every time before I enter like the market, I have to mark some of the key zones. So whenever the market actually breaks out of that zone is when I know like it's actually moving to the upside. Yeah, so we did our analysis for this is crude oil, this is oil. You can see like I have my analysis. These are some of the lines that I always draw. Yeah, and this is 5 minutes. So when I go to 1 hour, I think in 1 hour is when you guys, or even 4 hours. Yeah, this is 4 hours. I started marking these when it was down and it has been moving up. So whenever I see like some sort of resistance in the market, like right now over here, in 5 minutes time frame, you'll see like some sort of resistance in the market. When it comes to resistance in the market, you can see it even in 1 hour's time frame, 4 hours time frames, 5 hours time frame. You'll always see the resistance in the market, the struggles in the market. You can see that. So you can just come back and you can see like these wicks over here. You notice that this zone, like we have some hanging wicks, meaning this was once a supply zone that turned out to be a support, demand zone. Sorry, it turned out to be a demand zone. So if I wanted to enter this market right now, what I will do, I will wait for a breakout to let's say for me my analysis was that it's a strong buy maybe, but for me I'd actually predicted buys from point, yeah, to this, yeah. So I actually have like some live trades on it too. So one of the things that I'll always do is that I'll mark this zone, and once the market breaks out of this zone, I'll start looking for more buying opportunities, yeah, more buying opportunities based on my targeted area where I want to see the market coming to, or even stopping. So like for me right now, if I were to enter this market, my first stop will be around this zone over here. Why am I selecting this zone? Why am I selecting this zone? This is also one of the zones you'll see like hanging candlestick. This kind of shows like there has been some things or some resistance around this point, and we also have this point over here where we see some struggles in the market. So I just mark that, and then I know when to enter the market. I start, like now you can start paying attention on the candlesticks, patterns that are being drawn. The indicators will also help you know, like if I want to see if there are some orders left, there are some that are left over here, but the chances of it actually coming to the downside right now, it's not so easy based on the news that we had. Remember, the news that was released on, was it on Wednesday or on Tuesday? Wednesday, I guess. Yeah, so that is the only thing that will help me. Like I know, like in the market we must have like some sort of resistance, but what happened when the news came out is that we saw like some strong sell in the market before an actual push to the upside. So yeah, so right now, although the market is moving a bit slowly, you can actually note that it's on an upward trend. So yes, it might come down to this point, collect these orders, and then move to the upside, because this is actually the market. And you can see this zone has been one of the bullish zones. You can always mark that. So this is now me launching my indicators, and yeah, so you can see even this has actually formed like some resistance around this zone. So most probably, if this is to drop and to break out of this zone, we'll be seeing it coming down to this zone where we saw like some orders. You can see these order blocks over here. So it might come down to collect these order blocks. That is if it's going to come down. But how will you know if it's going to break out? Simple, easy peasy. Come, where is my trend line? You can always just draw these and wait for a strong breakout to the downside. I know this is 5 minutes time frame, but this is a technique that I learned from one of the traders. What he told us, you know, if you draw, like right now you can draw this as, this is my overall analysis of what's happening in the market right now, and I see like it's an upward trend, yeah. But when I want to mark, like if you want to get like one of the best entry, the breakout entries in a trending market, always try and draw like, let me delete these. You can always try and draw, whoa, why did I delete that? You can always try and draw like this move. So you notice that at this point, yeah, this one has touched this level once, comes here second, and then this is the third point. So if it's going to go up and break, it will break out of this zone. You'll see like a movement of this sort. If it breaks out, it will come, oh, what am I doing? It will come like, once it breaks out, you notice this kind of movement. It might just go straight down, or depending on what's happening in the market, the fundamental news, or you might see something of the sort. Oh, I've been talking for a long time now. I feel exhausted. I don't think I can talk for long. So this is what actually happens. So you might just mark this way. In as much as you're drawing your trend lines, always have like trend within a trend. That will also help you like to note some of the key points where there is breakout, stuff like that, and the chances of you actually catching a breakout early enough. I think there was a live stream. Was it a live stream that I did on a Sunday? That if you are in that live stream, then most probably you know what I actually mean. And if you were not, you can just go back and watch the live stream. I think it was done on a Sunday, if I'm not wrong. Where I showed like people two examples. Because over here, trust me, in as much as this is a trending market, this is a trending market, right? We also have like our support and resistance around this zone. You can see like this point where I had like this line, this point, and also this point. So you notice that every time the market gets to this point, it pushes to the downside. Yeah, so in a situation where there is like a breakout, yeah, it is so easy for you to catch this breakout, or you might wait to for it to break out of this zone over here. You see, like we have now, this is a trending market. Yeah, when I drew this line, there was this breakout that one could expect. One could expect, yeah, or you can wait for a breakout from these lines. The support and resistance is when you enter the market. So there are two ways. So it's up to you to find the key zone where you want to get like the best breakout, the best entry, and to maximize your profit. Yeah, they all have like their own risk, and that's why you can see like for us, what we always do is that once there is like a breakout, you see like this kind of a breakout, you don't enter the market first. You don't enter the market at that point. You wait for the market to go up, just this zone. If you see like it is resisting around this zone, it might go inside just a little, and then it might resist and start moving to the downside. Now you will wait for the first candlestick to form, and then the second candlestick. Once the second candle, you can enter with the second candlestick or the third candlestick. So that will help you to be safe. But always remember that in as much as you follow those rules, enter on the second candlestick or even the third, you need to have your stop loss and your take profit, because anything can happen in the market. Your analysis might be right or wrong. It might also be right, but then maybe the timing is wrong. Yeah, so you have to be safe always. So basically this is it. If you're looking for the best indicators, this is one of the best indicators for me. If you're thinking of trading like the smart money concept, I will always advise to go for this, because it has all those basic things that you need to understand. If you don't know how to mark the trends and everything, this is one of the best. There is an indicator that will actually draw even the trends for you, and this one actually gives you even the labels, the higher high, the lower lows, and you don't have to do anything. Once you've just installed these indicators, you're just good to go. You don't have to go and change a lot of settings or anything of the sort. You can see this is here. This is just what we have. You can see this is what we have. So you can just play around with it, and when you feel like it's okay, you go on with it. And yeah, so guys, that's it for today. I think this conversation is long. It's been long. So I entered 2 trades today, which I will show you. I entered 2 trades today: Audi, GPY, and Euro Audi. And one was a buy, one was a sell, and I'm actually selling on a short term because I'm using these indicators. So right now I have this trading on FBS league, guys. You can try that out. So I also have these. There is some sort of consolidation around here, and we're waiting for a breakout. Whenever you see this structure, the market is consolidating. It's gathering energy. Yeah, that is the basic term that I can actually use, so that if you're a newbie, you can literally understand the fact that whenever you want to analyze your market as a newbie, okay, these terminologies that we're using, these are some of the terminologies that just traders come up with. They come up with simpler terms that they can understand themselves. Yeah, so you can actually simplify an idea like demand and supply. You can use the floor and ceiling, easy peasy. Yeah, when you see this, it's consolidating over here. This is just trying to gather energy before it breaks out, either going to the upside or to the downside. So depending on the momentum or the number of people are stronger. If the sellers are stronger, you'll see the market breaking to the downside. If the buyers are stronger, you'll see the market breaking to the upside. That is the easiest term. That is the easiest way of explaining this. Yeah, that's the easiest way to explain this. So I think I should return this so that we can. Okay, so this is what we have right now, and you can see, like, right now we are consolidating, not at the resistance zone, but between in the midst. Like, the resistance zone is in the middle. You see the market going up, coming down, going up, coming down, blah blah blah, stuff like that. So when the market is actually consolidating, as a newbie, yeah, wait for the market to break out. Okay, just try and wait for the market to break out before entering the market, because when the market is consolidating, the market will always consolidate. Huh? Might be even on a ranging, it might also range, you see. So some traders actually know how to trade the ranging market, but if you do not know how to trade that, wait for a breakout. Yeah, always wait for a breakout, then you catch the movement. That does not actually mean like you're chasing the market or stuff like that. No, it doesn't really mean that. So like here we're waiting if this is going to break out to the downside, but for me I already entered the market, so I'm just going to wait to take profit. That is if it's going to get to that point, but all in all I'm moving with my stop loss. That is the key thing, moving with the stop loss. Okay, so guys, yeah, I think this video has been long. It has been long, so yeah, until next time guys, goodbye.